and gentlemen. We're starting our show today. It's gonna be dedicated to discussion of Indian stock market and specifically Dr. Reddy's Laboratories. Our guest today, Sarthak Gera, an
Yeah.
analyst from India who knows everything about the stock. And today we're going to ask him some questions. All right. So,
Yes.
uh, hi, Sarthak. Let's start with our questions. You
Sure.
chose for
Hi,
your
Dimitri.
Yes, hi. You wrote this report about Dr. Reddy's Laboratories, a pharma company in the Indian stock market. But first, why did you decide actually to write about pharma in the Indian market? There are many other interesting sectors like oil and gas, or I don't know, uh, retail, a lot of others, right? You chose pharma. Why?
So, Dimitri, the main reason for my choosing pharma was because I feel pharma, uh, as from an Indian perspective, as a very good growth story. And unlike a lot of other industries, it is not cyclical. The demand is always there throughout the year, so they are not affected. The industry in general is not affected by any supply or demand shortfalls, because if we see, research has shown us that the demand for medicines it just keep on increasing every year. So if we see it as a whole, holistically, we can say that the industry is set to grow year on year. So that is
Right.
why I felt one of the reasons. The another that I felt that I should take an Indian pharma company. Second reason will be that Indian pharma companies are actually have a very big footprint in the global market. Especially you can say US, Europe, which are the biggest consumers of generic medicines, and Indian companies are one of the major suppliers to them. So this was another reason why I chose Indian pharma sector, because of the market size, basically.
Right, right, clear, right.
Yes.
So let's now talk more in detail about Dr. Reddys.
Yes.
What do they actually sell? I mean, what products do they sell? In which geographic markets? Let's just probably
Okay.
provide some overview of that.
Yes. Okay. So basically, the first and foremost kind of products that Dr. Reddys looks at is generic, global generics. So basically, global generics, you can say, are general medicines, which almost I think 80% of the world uses. Like I think for for common cold, flu, and other things. The
Mm-hmm.
second segment that they have is called PSAI, which is pharmaceutical services and active ingredients. So Dr. Reddy's actually is the one of the largest suppliers in the world for PSAI, and the third thing that they are into is called other pharmaceutical products, which are generally basically medicines that are not very popular, but still they have a certain demand. So the second part that you asked me was that which geographical areas are they looking the company
Right.
supplies. So the first and foremost comes North America, basically North America
Mm-hmm.
and Canada. We can consider them as America. So
Right.
US actually is the largest market for Dr. Reddy's. Like almost, I think 80% of their 80 to 80% of the revenue comes from global generics, which the first place comes in US. Then they
Mm-hmm.
have Europe as the major market. After that comes India, Russia,
Mm-hmm.
and other emerging markets. So these are basically, if I put it roughly, the markets are US, Europe, Asia. In
Mm-hmm.
Asia, there is India and Russia, which are
Mm-hmm.
actually quite, which are come under the purview of emerging markets. And then there are other emerging markets as well, like Latvia and Lithuania, in which they are trying to expand. Yeah.
Right. 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 Okay.
Yes.
Okay. All right. So, U.S. is a significant, let's say,
Yes.
uh,
Yes.
share of their revenue, definitely, but
Yeah.
not 100%. It's just
No, no.
almost like, let's say, if we take like their global generics revenue, then it's probably about like half or something like that, right?
Yeah, more than
Uh-huh.
yeah, like more than half of it goes for, like,
Mm-hmm.
the segments come from US. It's actually so much so that Dr. Reddy's actually has some manufacturing plants there. So I
Right,
feel if a
right.
company which is it's a
Mm-hmm.
Indian domicile, for them to set up their own production plants in US just signifies how much of a demand that US is and Americas are providing for their medicines. So that
Right.
they have invested in infrastructure in that country.
Mm-hmm.
Uh, Obviously owing to the fact that their demand is really high from that market. So plus also another reason which I feel why they have so many plants in US is because for a company to sell drugs in another country, like for example Dr. Reddys is an Indian company selling drugs in US, so they
Right.
need to have FDA approvals for those
Right.
industries. So to prevent all that, they make their plants inside US so all that regulations can be kept under control.
Yeah,
Yeah.
yeah, yeah. Right, right. But what geographic segments, like geographic markets, have more potential for growth, let's say, right,
Okay.
versus each other, right?
Yeah. So, look, even though US and Americas and Europe are the largest markets right now, but the potential for growth, I will say, is not in these markets as such, but it is in the emerging markets in which India, Russia, and other smaller, Western European countries are coming into play. So
Right.
I think Russia and India have a very big potential for growth. I will say amongst all the sectors in which, all the markets, all the countries in which they are, Dr. Reddy's is providing the services. I think India, Russia, and other emerging markets are the ones which have a very good potential for growth. Actually, the they themselves, Dr. Reddy's themselves, in the latest annual report, have given an estimation of at least more than 10 to 15% growth for both of these countries. As compared to
Mm-hmm.
US and Europe, we can call them as almost saturated markets.
Right,
So their
right,
growth rates are ranging from 2 to 4%. So even the company themselves, they feel
mm-hmm.
that their growth potential is in India and Russia.
Right, right, right. So, going, I mean, down the road, like in the future, they will continue to grow, right? And how do you see the
Yes.
company in the next 3 to 4 years from now in terms of revenue?
Okay, so in terms of revenue, considering the impact of COVID, and we are also considering the fact that now that's in the past. So considering income after 2020, we actually see a small decline for the coming years. I think for the next 1.5 years because of global macroeconomic issues. For
Mm-hmm.
example, there are supply bottlenecks in a lot of parts of the world. Then there is actually the major issue is, which I feel is inflationary pressures, because uh, US has been increasing their interest rates. The Feds have been increasing their interest rates, and this will actually be an issue for revenue generation in the next years. But I feel that after this inflationary pressure will not remain for the
Right.
other for more than 3 years. 3 years is too much, but
Mm-hmm.
1.5 years, till then some kind of stability will come into the matter. After that, their revenues they actually will increase, because they have more, the company has more plans to increase the number of new medicines that are coming to the market. They have a lot of, actually more than 8 to 10 patents that are pending. So
Right.
these are good indicators that the revenue will rise, but it will have a small, it might drop a bit or might be stagnant, but that is only due to those external pressures, which I think no company can predict
Right.
fully. Yeah.
Okay. Okay. Yeah. Now actually, it is interesting, but the company, Dr. Reddys, they have a relatively high ratio of R&D
Yes.
expenses compared to other companies in the sector.
Yes.
So, do you think this should be regarded as a positive or a negative for them?
Okay, so look, if we compare Dr. Reddy's to their other peers in the Indian market only, so they actually have a R&D expense of Dr. Reddy's is actually more than 5%, which is quite large and a big gap from the other peers.
Mm-hmm.
I feel it is, for a pharmaceutical company, it is actually a very, it's a positive it's a positive thing for them because R&D is usually in other companies is treated as an expense, which
Mm-hmm.
does not, and it's a long-term expense. It does not, it spans over the time of more than 4 to 5 years. For a pharmaceutical company, their future success mainly depends on how much they are focusing on R&D, how much expense they are putting into the R&D, because R&D, as the name suggests, research and development, helps them to get new products, new APIs, new generics, which they can convert into products and sell in other places, okay, in their markets. So a higher R&D expense and a constantly increasing or a constantly high R&D expense over the years just suggests that in the future they are coming out with a lot of more products, with a lot
Mm-hmm.
more research, which will eventually help them to grow. So I
Right.
feel absolutely that's a positive aspect. Yeah.
Mm-hmm. Okay. Okay. So if we look at other companies in the sector, other Indian companies in the
Yes.
sector,
Yes.
Dr. Reddy's is not cheap given its multiples, right? There are cheaper stocks like
Yes. Yeah. Yeah.
Aurobindo, for example. So
Hmm.
why would you like, I don't know, recommend maybe? Why did you choose Dr. Reddy's for your report? Not any
So
cheaper.
look, I understand this perspective that Dr. Reddy's already has in a way or so. It's one of the largest companies in India as well for pharmaceuticals, and we know that large companies which have already outshined their growth stage will not. They might, or their the returns might be less, but they are continuous returns. Companies like Aurobindo Pharma, I feel that their EV/EBITDA multiple is 7 or 8, but the problem is that the revenues are stagnating. Okay, and
Right.
they have, I feel that they have too much exposure to US and European markets, and they are not focusing on countries like India, Russia, where you know 4 5 years down the line they might get impressive revenues because of the scale to which they can reach. But since companies like Aurobindo Pharma, they are smaller companies compared to Dr. Reddy's, their all of their, you can say in easier terms, all of the money and all of the revenues are locked up into US and Europe. So if the demand for generics, or due to competition, or due to many other externalities or reasons, they are not unable to perform in these two markets, suddenly their revenues get stagnated. So I feel that that is why the EV/EBITDA is less, their multiples are less. So we should not straight away go for such companies. We should also do some research. But this is the overview which I am giving you.
Right.
And now, why Dr. Reddy is a favorable option, even though it has a higher multiple, is because it is very evenly, not evenly, but it is spread properly in US and UK. And now they
Mm-hmm.
are actually focusing more on the emerging markets. So
Yes.
this might have increased their EV/EBITDA, but it does not impact the revenues in any way. If one market is failing or they have a lesser demand, they always have other markets to fall back on, which I feel is a very good strategy and a safe strategy for a company in the long run. Yeah.
Right. So what is your recommendation for investors regarding Dr. Reddy's?
I feel Dr. Reddy's is a bias. Like I will have the recommendation of buying the stock, because it is actually uh, quite more than 10 to 15% down from its all-time high, technically speaking. And considering the fundamentals, the company has actually really strong fundamentals, and I don't think investors should be worried about the multiples, because in the future this company has a very strong base, very strong foundation, and their plans for expansion are good. And it's a very old player in the market, so they know what they're doing. So it's basically like a, we can say like a very safe stock to pick. So any kind of macroeconomic turbulence or internal domestic turbulence, I won't affect the company very much.
Yeah,
So
thank you.
it's a yeah, it has a strong foundation. That is the one of the main reasons I chose this company, and
Yeah, I think
I
it's
recommend that it
mm-hmm.
should be a buy. Yes.
Yeah, it's very good information for our investors. Thank you. And
Thank you,
that's
Dimitri.
it for today for our show. See you next time. Bye bye.